Hello traders, Cousin Vinny coming to you from theclosingprint.com on September 27th, 2015. In this video we'll cover the indices, tick, tick, Q, NYSE, NASI, breadth, CPC, currencies, bonds, and commodities. We'll do a second video to follow up with IBD50. We'll show you the IBD50 list, the new list, and we will go from there. The indices were all down. You can see the SPY and SPX were down around 1.3%. Comp NASDAQ down 2.92 and 2.29% respectively. Russell and IWM were roughly down 3.5%. Tick cumulative is crossing lower. NYSE, NASI, both are looking bearish. Summation index on the NYSE, the NASDAQ, the New York Stock Exchange Composite has crossed. The NASI will soon. Distribution days are adding up over 80%, none over 90% this week. CPC is near a bounce zone for equities, and NYA, the New York Stock Exchange Composite, is near the lower band, so that looks pretty good. That's one of the caveats for the bears. Currencies, US dollar is at the top bands. It did move off of that level. And yen is slightly lower, which is slightly bullish for equities. You want to see the yen move higher and the US dollar move lower for higher or for bearishness on equities. The carry trade is slightly lower. That's also slightly bearish. So you can see there's some conflicting information. Bonds, TLT is lower. It's down below the 200 MA, and STO is greater than 80, turning back down. Commodities, oil is in a pennant, narrow range. Copper had a pullback, and gold is at recent highs. So these spiders, we can tell that we've been moving lower over the last 10 days. We're at this upper channel line that I've drawn in. We see the 30-period moving average moving lower. The 10 EMA is below both the 20 and the 30, so we're looking at counter trend trades into this zone to fade. We also have this volume by price levels and the recent Fibonacci levels. So considering all these things, with STO turning back up, we have some mixed signals with tick cumulative turning lower, MACD below the zero line, and tapering off the momentum of the week. We're watching the index, considering NYSE turning down and breadth being negative, that the SPY will see some negative action. Now the caveat is there's a few days left to the quarter, and some fund managers may not have made their bonuses yet and hit their criteria for same, so we're watching that and a possibility of a move higher. SPY 60-minute is also supporting some of that perception that prices may move lower. We can see the resistance here at the upper channel line. If you draw a line through here, the volume by price bands that price has to make it through. Now a gap up would definitely get us above that level. I wouldn't put anything out of the realm of what algos can do. But slow STO is turning down, MACD is turning down, as well as tick cumulative. So these things tend to make me think that SPY is going to open lower tomorrow morning on Monday. So keep an open mind. There can always be a gap up, but most of the information is pointing to lower. The NASDAQ looks very similar. This is the NDX 100. We saw this huge candle on Friday, and that's mostly due to IBB. The biotechs were hit pretty hard on Friday, and ever since Hillary Clinton made the comments about tech stocks, about biotech stocks and their cost, as well as pharmaceutical stocks, that we've seen lower prices. And you can tell by the volume that we look pretty damn bearish. So if this continues, this is just going to weigh on the NASDAQ as well as the S&P 500. Same goes for the Russell 2000. We had a really bad week, moving lower. We're in the green zone, however, on the STO, but MACD is below the zero line and below its signal line. We're below support, which is now resistance, so any bounce up to this level, you can see what happened on Friday and Thursday. Wednesday, Thursday, Friday, we tried higher prices and then we got rejected and moved lower. But we're at the lower Bollinger Band. Note the upper Bollinger Band is moving higher, so that means we could see a quicker move to the downside. Just using volatility as a measure. I'm going to run through these pretty quickly. We saw copper was down last week, got hit pretty hard. Gold continues to try to break above these current levels. We still have a lower high. STO is pointing up, MACD is above the zero line. So keep an eye on gold. So keep an eye on crude oil, which is making this little pennant pattern, having some difficulty getting above these volume by price bars. Slow STO is getting down towards 20, price still moving sideways, so that's somewhat bullish. We have a narrow Bollinger Bands, and MACD is above the zero line. So all in all, crude oil doesn't look that bad. It's building a case for higher prices, but could get rejected here as well if the US dollar all of a sudden decides it wants to take off and move higher. Currencies, we have the US dollar moving sideways, had this little bit of a wick on Friday, hit the upper Bollinger Band, moved back. The green line is the 50-period moving average. We're above the 200 and the 10-period EMA. MACD is moving higher, trying to get above the zero line, and STO is overbought. So the dollar is basically inside of this range and not going anywhere for the most part. We'll watch it this week for a move in either direction. Here is a chart of the US dollar, the Elder Impulse, the red, green, and blue sticks, and the yen, which is the red and the black sticks. With the yen moving higher, you can see how that's bearish for the indices. In the background is green area. That is the New York Stock Exchange Composite. You can see as the yen started to rise and the dollar started to drop, that was bearish for the market. So if you're bullish, you want to see this continue to move lower. If you're bearish, you want to see the yen rally and cross above the US dollar pricing right here. Here is the 10-year, here is TLT, the 20-year. We had this gap up on Thursday, hit the 200-period moving average, the purple line, moved lower. Now we have the spinning top on Friday above the 10 EMA, just below the 50, and you can see the dotted line is the 20, and we're just above that as well. So we only have the 200-period overhead to deal with. So we'll be watching bonds. If you are bullish stocks, you want to see bonds back off, the 20-year in particular, TLT to move lower if you're bullish SPY. So keep an eye on that tomorrow, as we will also. Tick cumulative, we're crossing lower, and we can see the moving average is starting to roll over as well. And as far as the NASDAQ, the tick Q is crossing as well, looking very similar with price action near the lower Bollinger Band. NAMO continuing to move lower. NAMO for the NASDAQ continues to move lower with the biotechs getting hit, and we also see NASI turning south as well. If this crosses over, that bodes bad for the bulls and good for the bears. So keep that in mind. Also keep an eye on the biotechs tomorrow. NYMO, same scenario. We did finish a little bit higher than the Thursday low at 11.64, minus 11.64. We close at minus 10.22, but we do have a crossover already on the summation index, so keep an eye on this tomorrow. If you're bullish, you want to see this turn back up very quickly, and NYMO stay above the zero line. Same thing with the NAMO, you want to see that reverse and get above the zero line. However, I think we're going to start to move lower. So we'll be keeping an eye on both of these for indications which direction breadth will take the markets. And last, of course, VIX, we have elevated levels. We're moving higher during the week. For the most part, you can see the moving average turning back up. And the S&P 500, all these red elder bars. Stochastic RSI continues to point to higher VIX values. So the higher this gets, that's slightly more bullish for equities. VIX VXV, same scenario here. The 1 month to 3 month volatility indexes, we see we're right in the white zone, so we're really not getting much of a signal here. We want to be in one of the other extremes to get more bullish or bearish on the markets. And lastly, of course, here's the put-call ratio. We're in the green zone, so that's more bullish. The bottom line is we feel like the markets could go either direction. So watch for price action at the opening range, and we will trade accordingly. That's going to do it for me for the day. This is Cousin Vinny coming to you live from theclosingprint.com with the weekend video and the look at the week ahead. Here's the new IBD50 list, ranked by percent change and performance last week. You can see Cirrus Logic is at the top of the list, Nike, ICE, and Hawaiian Holdings. And in the bottom of the list, we can see pharmaceuticals didn't fare that well as some of the healthcare providers. Well, ranked by sector, we can see cyclicals, energy, financials, healthcare are all red, and we see industrials and technology taking on the chin as well. So that's going to do it for me for the weekend. I will post some charts later and perhaps go through the IBD50 individually in a video part 2.